there are reports that Silicon Valley Bank is going to get bailed out, and the Federal Reserve is now holding an emergency meeting on Monday. I want to talk about that, talk about whether that's actually happening, and talk about USDC because it is getting closer to peg right now, and Circle has given some more information on what's happening behind the scenes. So if you don't mind hitting the subscribe button, I appreciate that. I've published something like 7 videos in the last 30 hours because there has been so much happening. I woke up at 5:30 this morning after going to bed after midnight last night. I was too wired to fall asleep early, and I'm waking up early to publish videos just like this so you can get the most time-sensitive information because this is a very important time. If you have not been watching over the last year, it's fine. Start watching now because there is a lot happening and you could make some good money. You could also lose some money if you're not careful. So let's dig into all this. If you want to get information a little bit faster, a lot of people have been joining the Patreon because I do post there. When there's really important information, I post there first and then post to YouTube. Now, you can see the whole crypto market is looking a little bit better. I mean, Bitcoin's pretty well above 20,000. Depending on what exchange you're looking at, like on TradingView, it's at 20,540. On crypto, on CoinGecko, it's at 20,400. A lot of other top cryptocurrencies are up a little bit here today, but USDC is still depegged. It went all the way down to 88 cents. DAI still depegged, but now it's at 98.2 cents. So these cryptos are starting to look a little bit better. We'll talk about that here in a second. Now let's talk about this SVB resolution. According to Bob Elliott, Chief Investment Officer of Unlimited Funds, relief efforts may already be underway for Silicon Valley Bank. Elliott claimed, among many items, that big banks actively were working on buying the SVB business. Also says the U.S. Federal Deposit Insurance Corporation, or FDIC, is planning to cover 95% of uninsured depositors to the acquirer, and that 50% of uninsured is going to be paid out next week. Now, this would really help because the main problem is that FDIC is slow, and so is getting back and going through the bankruptcy process, right? A lot of the funds are still at Silicon Valley Bank, but they're illiquid, and it will take a while to weed out. And then a lot of these companies that are relying on Silicon Valley Bank will have to go bankrupt in the meantime because they won't actually be able to pay their employees. So getting 50% of their money next week would be a huge relief for a lot of people. There's also news of the Fed having an emergency meeting on Monday. So they say here that the Federal Reserve of Governors announced that it will hold an emergency closed-door meeting under expedited procedures at 11:30 a.m. on March 13, 2023. Matters to be considered at the emergency meeting will be to review the determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Now, you can find this on their website. I'll be honest, it's kind of hard to weed through exactly what this means and what they're going to be talking about. It sounds just like this is a closed door meeting talking about Fed rates. Now, this is not unique. You can go back a year, 2 years, and see these closed door meetings just like this, where they just announced this and said that it was in the advance notice of meeting under the Expedited Procedures Act. It sounded like an emergency, but it's been happening for a while. And I went on the Wayback Machine basically trying to figure out if this was posted a while ago. And to be honest, I hadn't used that website before today, but it looks like this was new as of today. It doesn't look like there's anything that shows that this has been there for a while. So you can actually see it down here, dated 3/10. So yesterday, it looks like they put this up. I don't know if this is to really talk about raising or decreasing rates because of Silicon Valley Bank, or if this was just something that they were going to do anyways. It's hard to tell at this point, but I would not be surprised if the Fed stepped in. Now, I realize some people don't want the Fed to step in, but you have to realize this is not just bailing out the banking industry. This is helping out all of tech, and not big tech. This is all the small startups, hundreds or thousands of companies that had money at Silicon Valley Bank that won't be able to start paying their employees starting this week. There are tens of thousands, if not hundreds of thousands of people that will be affected by this. They'll be laid off or they're not getting paid. This will trickle out to other areas as well, right? All these workers have mortgages, they have car payments, they buy things at the store. They're members of our economy, right? So if they're not buying stuff, that's definitely going to trickle down and hurt more businesses. And there'll be a lot of innovation that's lost in tech. I mean, we're talking about, again, some of the fastest growing industries, some of the fastest growing companies in the US will be affected by this. It will also cause a lot of distrust in the banks. If you can't hold $300,000 at a bank without being a little bit worried, there are going to be a lot of people that go and take their money out of any kind of fintech company, of any smaller regional bank, and just go put it in JP Morgan. We'll whittle down to some of the largest banks again, where we won't have any smaller players. There'll be more concentration of power. A lot of these fintech apps that we use will probably explode, right? Because they won't actually be able to, cover all the withdrawals, because they'll be having bank runs as well. And then this could cause a much larger problem. I think the FDIC and the Federal Reserve do have to come in and bail out this bank basically and say, hey, we'll cover everything. We have funds set aside for this in case this happens with other banks too. And then that will stop the bank run. Personally, that's just my opinion, but that doesn't mean that I don't think that having Bitcoin is more important than ever, right? And we'll talk about that here in a second. But let's go on to USDC, an update on USDC and Silicon Valley Bank. So this is on Circle. This was pointed out by, I think it was the founder of Circle as well, that they were posting this. They say USDC can be used 24/7, 365 on chain. Issuance and redemption is constrained by the hours of the US banking system. USDC liquidity operations will resume as normal when banks are open Monday. And they still say USDC will remain redeemable 1-for-1 with the US dollar. They go through what happened and they talk about their position. They say USDC is currently collateralized 77% with US Treasury bills with a 3-month or less maturity period. This is really smart that it's short-term Treasury bills. That means that it's easier to get liquidity. There's not as much of a problem trying to sell them because they're not going to be discounted as much either. So they could sell them on the open market if they had to and probably not take much of a loss. But I don't think they're going to have to do that because, first of all, again, they're just 3-month or less Treasury bills. And with $32.4 billion right now, they're making about $1.5 billion a year in interest, $100 million a month plus. And they have 23% or $9.7 billion with cash held at a variety of institutions. Now, a good percentage of this is at SVB Bank. They say that they did withdraw some of their money and put a good portion of it at BNY Mellon, but again, about a third of their cash on hand was at SVB. Now, a lot of people have been transferring money to Circle, so I wonder if they've reached out to a lot of other people in crypto saying, hey, can you help us out with this kind of liquidity crunch and we'll help you out in the future or something like that. But right now they are getting a lot of large deposits. But you can see 3.3 billion. So they have 6.6 billion for people to withdraw. They have another 32.4 billion over in treasuries. They won't lose all of this cash held at SVB, even if the FDIC does not come in and save the day, or the Fed doesn't come in and save the day in the next week. The majority of this money will probably be returned to them, maybe 80 cents on the dollar, but it will take weeks or months to get this back through the bankruptcy process or whatever goes on after this. So as of Thursday, they had initiated transfers of these funds, but they weren't able to get it out. They say that SVB may not be able to return 100% of their capital, and as FDIC issues IOUs, the advanced dividends may take time to come in, basically, or the IOUs will take time to come in. Now, in such a case, Circle, as required by law under stored value money transmission regulation, will stand behind USDC and cover any shortfalls using corporate resources involving external capital if necessary. So they will raise money if they have to. They'll go into their own reserves. Now, keep in mind, again, they're making a lot of cash on these treasuries. I think they're going to be fine, right? I've said this even yesterday in my video talking about what was happening with USDC, that I think they'll repeg, but I'm not going to go bet on that. I'm not going to try to leverage long on USDC, and I'm not buying USDC or anything like that to try to get into it. I said last night that at $1, I said that I would sell this right now and get into something else. I'm not going into it now, though. If I had it now, I'd probably probably hold on to it for a little bit longer now that it's moving up. But I'd just be careful still, right? We don't know the extent to what's going to happen. Even Tether, a lot of people are feeling good about Tether right now, but Tether hasn't really said anything about where their reserves are, right? They could have a lot of money there as well and be facing the same issue next week. Now, I think this is a good point for why Bitcoin was created in the first place. This really shows, right? The solution is always more bailouts. Bailouts for the rich, bailouts for the poor, for the banks, for the people. All of it will be funded through perpetual currency debasement. And that's where Bitcoin comes in. The fact is that Bitcoin is the reason that we can feel safe at night knowing that some currency is actually ours, that we can actually control it. Even if the value goes up and down, the fact is we know it can't be taken away because of some bad actor, right? As long as we have it in a cold storage wallet that is safe and that we have good procedures for keeping safe ourselves, we know that that is going to be a good place to store some value over time. Now, Tim Draper also says he's been advocating for CFOs to keep some cash in Bitcoin for a while now as a hedge fund, as a hedge against bad government and banking systems. The Silicon Valley Bank crisis may keep some companies who didn't buy at least some Bitcoin from making payroll on Monday. This is a Main Street problem. This is a good point, right? This may accelerate the adoption of Bitcoin. Maybe right now is not the best time for that, right? A lot of banks are trying, or a lot of companies are trying to sell basically any asset just to get cold hard cash to give people. But in the future, I could see banks, especially in Silicon Valley, holding some kind of digital asset, especially one that's not worried about Repeg, and holding it so that they can make transactions, right? Maybe you sign a contract saying that you'll take 1 Bitcoin a month or something if for some reason they can't pay through their payroll providers, or maybe they say that they'll just pay you $1 in Bitcoin for $1 in pay, whatever the price of Bitcoin is at that time. But I would expect some companies to start thinking about this a little bit deeper as this situation unfolds, because they could be sending Bitcoin. This could be really easy. Now, of course, then you have to take on the volatility of Bitcoin, but it's still worth thinking about, I think, especially if you're someone that's bullish on Bitcoin anyways. Having, a couple hundred Bitcoin and, couple tens of millions of dollars worth of actual currency, but having that Bitcoin as a hedge. So again, maybe you have a few $1 million in Bitcoin just to get you over the hump in case you do have some kind of issue with the bank, might make sense. Let me know your thoughts about all this underneath the video, though. If you want to know some of the top cryptocurrencies that I see in the market right now, check out the link on the end screen. Thank you so much, and I'll see you in the next video. Bye.